Hey, what's going on, guys, and welcome to the very first video on the My Stocks Journey channel. I've been super excited to bring this to you guys, create this channel and, kind of document my progress as I do create this stock portfolio, and, I start to, really dive really deep into the investing world. It's something I've been doing it for about 5 months now, something I've been dabbling with. I got really serious about it pretty recently with the whole market crash and the oncoming recession and everything like that. And so with that being said, I figured it'd be a good idea, hey, why not document it? If you get some people who want to check it out, see my progression and do all that, awesome. And if not, hey, it's okay. At least I can come back and watch this years from now and really get to see the progress I've made from, just starting. I have a total of about $7,000 invested right now. I'm going to go over what I've invested in, how I plan on doing it, how I plan on beating the recession, how I plan on doing all these things, give it my perspective. And one day, if I make mistakes, I help you guys not make those same mistakes, and so forth, so on. So if you do want to take a look here, it should pop on the screen about now. So I do have two different accounts. I have one through Robinhood and one through M1 Finance. M1 Finance is the one that I really started with. I started investing with M1 Finance, but over time I've gradually moved towards Robinhood just because I do like a few of their features more. Just the fact that with M1 Finance, you can only invest between 9 and 10 a.m. There's a little window, but you can't really see what's going on with the market before then. You can't really control what price you buy it at. It's just not as convenient as Robinhood, but what I do like about M1 Finance is the fractional shares. I know that I am on the waiting list for Robinhood, but that waiting list, I believe, is going to be a while. So yeah, so let's take a look. So I will go over our M1 Finance first. There's only one stock in here. This is my Stag Industrial stock. Stag Industrial is one that I really am a big fan of. It's a real estate investment trust, single tenant, operational industrials. And it's a super good dividend paying stock. I do believe it's about $1.44 per share, somewhere around 3% on average. I think it's up to 5% yield about right now. And this is, I do majority dividend investing. I am looking for the long term, but I don't like necessarily getting certain dividend stocks. I like dividend stocks that are growing while also paying dividends. I like it to be a little bit more consistent. As we will see, the majority of my stocks are more consistent with their flow. They're not too volatile. I'm just not a big fan of distress, of just watching it go up and down, up and down. Something a little bit more consistent is what I tend to prefer. But we are looking at Stag Industrial right here. This is an exception. Stag Industrial does tend to go up, down a little bit, but I'm just a super big fan of how the business is ran. I'm a super big fan of how it's been reacting to the market. And I did right here. So my average share price that I got Stag Industrial at was $21.50. I caught this right towards the bottom of the market, just low, kind of honestly by accident. I didn't necessarily know if it was the bottom or not. I just knew that it was a super awesome price for such an amazing stock, and I did just go ahead and get those. I bought 63 shares, 63.8 shares, which totaled out to about $1,372. And that was the very first big purchase I made. I did have some other stocks that I started off with. I had my Apple and everything, but around January 30th or so, I decided that, okay, these were the first stocks I made. I'm up a lot. I was up at the time $600-700 on all those. The market was booming. I invested a little bit in a Tesla back when it was like 300, and that went up to like 900. I sold there, and I took my $700 or $800, and I was like, okay, it's time to buckle down. And now that I actually kind of have an idea of what's going on, let's sell while I'm ahead, come over to Robinhood, and actually go. And that actually ended up being beautiful timing, because like the day or two after I sold is when the market started to crash, and then all the bad stuff started to happen. So I didn't really try to time the market, but it was actually just a very coincidental blessing that I did sell out when I did, because I managed to sell out and then get back ahead and get a lot of these stocks for super cheap, super good deals, what I thought was worth it. So yeah, so I got Stag Industrial, 63 shares, 63.8, almost 64 shares for $1,000, $372, excuse me. And yeah, so dividend yield, says it right here, 5.77%. It pays $1.44 per share, so it does pay a good bit per year, which is something I'm super excited about. And it is also a monthly dividend, which is something that I really like. I just like to see the consistency and get to see it every month, something I'm a fan of. So we will close that out, and we will come over to my Robinhood account. So The very first big stock that I do have, and this one is my biggest one in my portfolio at the time, it is another real estate investment trust. One, as you can tell, I'm a super big fan of REITs. It's just something that I do have a lot of faith in, and it's something that I see going really well whenever the market comes back. Store Capital is one that's backed by Berkshire Hathaway, and that's another reason why I was very, open to buying it. Something, I think Berkshire Hathaway owns like 10% of the company. So knowing they have that backing and knowing that, they have a good management, it really attracted me. I did get these shares, should show it around here somewhere, excuse me. Yeah, so my average cost is $16. It is down about $15.53. But so about 47 cents or so. But if we do take a look at this is an example of a stock that I'm a big fan of, something that just shows very consistent growth over the years. I know we had a little bump here, but that consistency is something that's super attractive to me, because I do just like to not have to deal with the stress as much. I'm just a bit more, maybe less risk, less reward. If it's for consistency, I'm okay with that. So we are down to about $15.50, but it does have all-time high of, let's see, about 40.15. So I do think there's a lot of room to grow, especially a year or 2 years, whenever the stock market does start to reach its highs again, whenever that may be. No one really knows, but I'm investing for the long run, so I'm perfectly okay with waiting, buying this low, and hey, if it goes down even more, I'm just gonna throw more in. I'll dollar cost average in, and it's no problem with me at all. If this goes down to say $13, I'll maybe go ahead and get another $1,000 worth of shares, just to make sure that I'm benefiting and getting as much profit from this as possible as it grows back again. This is another dividend paying stock. It does pay a dividend yield right now of $8.91, which I know we don't usually want to chase yields, but I think at a time like this, the higher yields typically are just there simply for the fact that values are just so low. And yeah, so that's my Store Capital. So those are the big two in my portfolio. I do have this free forward share just from the free Robinhood account. My second one is Maine. Let's see if it loads. Almost there. There we go. So I do have Main Street Capital. This is another one that I'm a super big fan of. It's done super well over the years, as you can see. Even though the growth has not been that, exponential, super slow growth, but I do believe that it will continue to slowly grow. I do like how the business is ran, not too much debt, not too much risk, and we can kind of tell what's going to happen, hopefully, after the market starts to, the economy gets back to normal, whenever that time may be. This is another one that does pay a super good dividend. It's at $11.25 right now. I think back it was like 5% dividend before all this happened, so that it's not too high. And yeah, so I do have $999 worth in this one, and I bought it. It was $22.16. Right now it's at $22.20, so a little bit of gain there, not too much, but I do believe that when this goes back up, there's going to be a lot of room for growth on top of reinvestments from dividends and stuff like that. Let's see. So my next big one is Bank of America. I wanted to get into the financing side. I know I had Maine, but I wanted to do more of a big mainstream, one of the higher up banks. And so after doing my my due diligence and everything, I did find that Bank of America just had a super strong plan and was super good about making it through this recession and figuring out how it was going to do certain things to ensure that it stayed afloat. And for that reason is why I did buy, I think 30 shares here for $21.95. I am down a little bit. It's down like 20 cents from what I did buy in, but it's not too bad, honestly. And the dividend yield for this one is 3.33%, another super solid dividend. This is a little bit less than the other ones, especially since the fact that its value is a lot lower right now. But honestly, I do believe that Bank of America is going to be around for so long, and it's a super strong system, and that for that reason, I have no problem with taking a little bit less of a dividend for that type of safety. Next, we have CocaCola. CocaCola is one that I actually did invest in 2 days ago. I decided it was about time that I got into it. It was between Pepsi and Coca-Cola, and honestly, I will probably end up buying both I'm looking for a better price for Pepsi, but Coca-Cola is one that, as you can tell, like it's had a little bit of a bump in the road, but nothing too insane. But as of recently, it didn't have a lot of growth, and that is something that I did take notice of last year. And with that being said, I do believe that once things, maybe next year and a half from now, when sporting events reopen, I do believe Coca-Cola could even exceed its previous highs, simply for the fact that people are going to want to get out, want to go when they finally can, want to go get those drinks, want to do all this stuff. And for that reason, I did buy it. Coca-Cola does have a pretty good dividend yield, nothing too crazy, but I am, like I said, kind of like with Bank of America, I'm a super big fan of the company, how it's ran, not crazy debt, super big list of assets and different ways for them to make money is something that is attractive to me as well. And that is another reason why I bought Coca-Cola. I bought 15 shares. My equity in the company is $674, and the 15 shares cost me $684. So I'm down a little bit from the $45.60. It's gone down about 61 cents, which is nothing. Once again, nothing too crazy. In my very last stock right now, I have 7 total. I do believe, 7 total. D6 plus Stag is Microsoft. I think this one needs the least explaining. I believe Microsoft is just honestly one of the best companies that exists. Especially, you can go look at their 5-year, and it speaks for itself. Whenever I look for consistency, this is what I mean. Just the level of increase that this has had in a very consistent, range, nothing too volatile, just steadily gone up, had a super good year last year. It's another company that I believe is just going to do amazing things and be around forever. And for that reason, I did buy it. I know their dividend yield is low, but I believe that Microsoft, no matter what you're chasing, if you're chasing dividends or value or anything like that, Microsoft is a go-to company just to really defensively play your portfolio. No problem. And so those 7 are my current stocks. It's how I spent my $5,537 on those, plus $1,500 on my Stag Industrial stocks. One that I am looking to get into really soon, actually 2, I am looking to get in Apple. But if you do take a look at Apple, it has gone up significantly since the previous drop, and I'm looking to kind of get in at a little bit lower price. I don't want to get in too high, and it start going down. So I'm just going to kind of wait on Apple a little bit, see if possibly I could get in at a better price. And if not, if it does continue to go up or stay consistent, I probably will buy in, because just like Microsoft, Apple's one of those companies I believe is just going to be around forever. They're going to constantly be on top of all the newest technologies, in my opinion, and they're going to constantly be evolving and evolving. The second one is Tesla. I do believe that Tesla is a bit overvalued right now. After everything that's going on and has gone up a lot, I do believe it's almost reached its previous highs. Yeah, I mean, it's recovered lots of the loss, and I do believe it's going to go down again. So with that being said, I am going to wait on Tesla, see if maybe it reaches that 500 mark, the 500, 600s, and that's when I'll buy in. Like I said, if not, if the market starts to recover and so does Tesla, I'll buy in, but I do believe that it's going to go down a little. And the last one, again, is Pepsi. Pepsi's one that I'm super excited about getting. Just like Apple, just like Coca-Cola, it does just show, a good amount of growth, super consistent. It's super globalized everywhere. And, it's something that I believe having in your portfolio is just super strong to weight it down. And 10 years from now, it's going to, have accumulated a lot of value. And that's why I'm definitely going to get into Pepsi at some point. It has recovered a lot. I am seeing if it goes down a little bit, once again, just to see if I can get it at a better price. And if not, hey, we'll get back in. But yep, so that will be my first portfolio. This is how I spent my first $7,000. I set my emergency fund to the side, and I set my cash and all of this different stuff. And I pretty much just invest all the extra cash I'm getting right now, especially with the stimulus check and all of that. It does help out a lot, just being able to get this extra cash and have it start working for me. I'm in college. I'm an MMA fighter. I can show you guys that. All right, it's fine. I'll pop a little picture right here. But yeah, I'm an MMA fighter and I have a lot going on. And so just knowing I have these things on the side and my money's working for me, it does just, it gives me a sense of security for my future and all that, and it's super exciting. Just to be able to bring it to you guys and document all these different things. So I will be posting on this channel probably once or twice a week, kind of giving my take on certain situations. I would love it if you guys give me feedback in the comment section, just showing me what y'all think about certain stocks, your opinions, what stocks are you buying, how you're dealing with the recession, and I'm super excited to engage with you guys. And yeah, that's about it. So I will see you guys soon with the update. If I buy anything, if I sell anything, I will definitely let you guys know. And yeah, I'll see you next time. Peace.